So today we are going to talk about market phases, and market phases is something that most of you are aware of, if not all, because some are very new to the system. And today actually marks the third day of the bootcamp, and our topic of discussion today is MTF market phases. So as you know, we trade medium time frame order flow from medium time frame point of interest and use LTF executions once price gets there. So before we start on this, we can maybe do a quick recap of yesterday's session, and to see those guys who maybe had a question yesterday, but they never got a chance to ask. So today's session won't last that much, because if you're very keen, you realize that my voice has changed, right? Yeah, so I'm kind of unwell, and it's actually good that I'm holding this session. Yeah, around 7 p.m. East African time, I thought I couldn't hold this session. Anyway, so yesterday we talked about institutional supply and demand, and following what most of you sent me today. Actually, you guys tried. I can't complain. Most of you tried. Yeah, so I don't think there's much to recap on it, because it's a very simple concept, right? Yeah, it's a very simple concept. So today you just allow me go direct to market phases, because as you know, we always trade the MTF, right? Yeah, so this is one of the sensitive topics that one is required to understand, right? Yeah, so generally, okay, what we usually do, we usually just concentrate on MTF, that is the M15, sometimes M30, generally the medium time frame. Some might choose to use M30, but for me, mostly I do use M15. Yeah, and you can map your zones from different levels. You can map your zones from H1, you can map your zones from M15, you can map your zones from M30. Yeah, so long as you know what you're doing, and you have an objective and a general narrative. Because you know, on MTF, we usually trade a given narrative to meet a given objective, right? Yeah, so I just try and explain what we mean before. So I think, okay, let me just push that up. Market phases, generally, we have 4 market phases, okay? We have phase A, phase B, phase C, and phase D. So when talking of market phases, we have 2 concepts that you have to understand. The first one, are you pro or counter on the MTF swing structure? And are you pro or counter on the MTF internal structure, right? So basically, it's very simple, and you guys will understand very easily. And after this session, actually, most of you will be well conversant with the concept, and you can start applying it on live chats. So as usual, first I'll talk about phase A. So we'll do first the theory part, then we'll do the technicals, yeah, the illustrations, then we'll go on charts and check. So what did I, okay, so let's use this zone. The first one, we have phase A, because I've told you guys we have phase A, phase B, phase C, and phase D. So I'm not referring from anywhere, and if you really need to write them, you should do. Because once I'm done with the session, then if you have to refer something, then you'll have to watch the entire video. So if you have to jot something down, then please do so. So the first phase is phase A. So on phase A, as I've told you guys, we only concentrate on 2 concepts. Ask yourself, are you pro or counter on the MTF swing structure? Are you pro or counter on the MTF internal structure? So for phase A, let me reduce this size. Yeah, so for phase A, we are pro on both structures. So for the guys who don't understand what you mean by pro and counter, pro is when you're in line with the structure, and counter trend is when you are against that particular structure. So I don't want you guys to behave like this thing is something complicated, kind of. It's not. So the first one I've said is phase A, and I've said phase A, we are pro on swing, and we are pro on internal. Okay, so obviously, you know, where we have like these how should I call it, once we have more than one case scenario, we always have advantages and disadvantages, right? If only we had phase A, then there couldn't be that much advantages and disadvantages. So where we have like 4 phases, obviously every phase has an advantage and every phase has a disadvantage, right? Yeah, so phase A, I've said you're pro on swing and pro on the internal. So the objective of this phase is to target the weak MTF swing low or high depending on the market direction. That is the objective of phase A, to target the weak MTF swing low or high, because I said in a bullish market, all the highs are weak, right? So if you're buying in a bullish market, meaning that targeting to take out the weak high, okay? Yeah, and this is the most high probability phase since both swing and internal structures are aligned. So in this phase, I don't usually advise for much confirmations. Once you've realized that the internal and the swing is aligned, you can just go aggressive without no much confirmation. Okay, yeah, so you can just take these trades aggressively. And we have phase B now. So for phase B, we are pro on the swing and we are counter on the internal. Okay, so I won't be writing much, but once we go on to illustrate, you'll just understand. So don't worry. So we have phase B. So for phase B, I've said we are pro swing and counter internal. Okay, then in this phase we are anticipating that we might be ending the swing pullback. Okay, yeah, so this phase I've said we are trading the counter internal and the pro swing. So when you're trading the pro swing, meaning you're anticipating that we are coming to the end of the pullback and the internal structure is about to shift in line with the swing structure. Are you understanding? Then we have phase C, where counter swing and pro on the internal. So on phase C, counter swing, pro internal. So in this particular phase, we're anticipating for the start of the swing pullback. We're anticipating for the start of the swing pullback. Then lastly, we have phase D. Some of you usually call it phase D because it usually fucks people up. So we have phase D, and on phase D, we are counter on both counter swing. Okay, a minute. Yeah, so we are counter swing and counter internal. If at all you know how to time this phase, then you can trade it comfortably. But if you don't, then in most cases you'll always be taken out. So generally, they're the market MTF market phases, and I would say it's MTF market phases, not HTF, not TTF. Market phases only apply to the MTF structure. Okay, so let's say we had a bullish swing leg. Okay, so let's say we had a bullish swing leg like that. Then we have a breakout structure. Now we are expecting a pullback, right? So the internals, like I said, are shifting like that nicely. Then price maybe gets to this zone, does that, a bullish shift, maybe to this level. Then price gives another fractal confirmation, goes lower because we are also expecting price to react from these zones just to validate the significance of the zones, right? Yeah, so price does that, then goes back, continues. Price gets to the deep swing discounted levels, then maybe we have a bullish confirmation like that. Price comes, reacts to that zone. Price comes, reacts to this zone. Remember, we're bullish and we are going up, up, up. Then price comes, does that, then eventually takes out the previous week swing high. Let's have it like that. Is this enough to explain us all the phases? Let's maybe move this here. So we have something like that. I know I'm not perfect in the in this drawing, though I'm a perfect drawer. I can draw perfectly, by the way. So we have something like that. This was the previous swing breakout structure. So you know, for swing we mark them with complete lines. So let's have that as a swing. So swing boss. So that being a bullish market, this low is now a strong low and should or rather it's protected. Then this high is a weak swing high. Okay, nice. So we have that high breaking structure over there. So as you can see, our swing is just this leg pullback continuation, right? Then this inside here is the internal. Then inside the internal we have the fractal, that is a small internal. Okay, so I talked about that in our previous sessions, and I know most of you are not that bad, not that bad. Yeah, so I was to draw this side better, but anyway, you guys will get the concept. So let's assume we have a demand zone over here. Okay, nice. And our range for pricing is running from this low. Okay, so pricing to that high, right? Meaning we have the premium at this point, and we have, let me increase the size a bit. So premium, let's denote it right. Not that, okay, let me increase, nice. Then we have the discount, and I said at the middle of the 50% level is the equilibrium, right? So anything below 50% level is the discount, and anything above the 50% level is the premium. Yeah, so, and just from the basic pricing knowledge, we sell at the premium and buy at the discounted levels, right? So remember, you already have a bullish swing leg. Now you want to start, because you can't just be waiting for these pullbacks. Then you want to take your trades always from the pro levels, okay? Or maybe in line, because for us intraday traders, that might take long, waiting for the entire days. This can even play out maybe in 3 days, this pullback, then a continuation. So we always want to get involved in these longs, these pullbacks, continuation, right? So that's where market faces come in. Because you can't just come to this chart and try buying from this zone. Or you can't just come and try maybe selling here, right? So we must have rules. Yes, market is market, or the price is price, and price can do anything, but we must have rules. We must know that we are at an MTF demand zone, and we're anticipating to go higher. This selling is very, very risky. So, and I said, after a swing break of structure, we always expect a pullback. How do you confirm for a pullback? The internals have to shift against, right? Against the swing, like that. Then for continuation again, the internals have to be aligned with the swing. That's what we always call an order flow realignment, like that. So you can see things are very, very simple. So phase A, I would say phase A is pro swing and pro internal. Pro swing and pro internal. Okay. So, and phase A usually the objective of phase A is to take out the weak swing high or a swing low, depending on market direction. But because we are bullish, let me have that. Yeah, we are bullish. Let's make our examples from this bullish market. So trying to take a trade here, remember at this zone we still have both swing and internal bullish, right? So trying to buy from this zone is phase A. Are you guys understanding? Because you are in line with the swing and the internal, but it's a low probability phase A, since, because after break of structure, you always expect a pullback. So it's better you wait for the pullback confirmation for you to get involved. But in some cases, once we have a quick break of structure, you can always try and take price higher. Okay, yeah. So trying to buy from this level is a phase A, though a low probability phase A. Then after we have a shift, so remember, having a shift, the internals are now against the swing, right? Trying to sell, I'll denote them all, just don't worry. So trying to short after the internal shift, bearish, that is a phase. We are in line with the internal, but against the swing, that's a phase B, right? Then let me say you play this. Sorry, that's a phase C. Sorry, I didn't draw this thing perfectly. Let me bring that there. So we have this. Remember, we also have these zones. Okay, we also have these zones. You just have to remain very, very flexible, because price will always do anything. Okay, we have that zone. We have that supply zone. Then the internals over here, shift bullish, we have that demand. We have this supply zone over here. Nice. So then we have these. Let me bring this back a little bit somewhere there. So we have these zones again. Remember, these are an MTF swing leg, okay? This is an MTF swing leg. This is an MTF swing leg. Nice. And maybe that. Nice. So I didn't draw this out drawing well, but there's no problem. There's no problem. We'll see these things on live chat. We look for a good zone, then see these things. So remember, we've started the pullback, right? You are shorting. Why are you shorting? Why are you shorting? You're shorting to play the swing pullback and play the internal pro trend, right? Because at this point, the internal structure has already shifted in light. Has already shifted bearish against the swing. So this is the first confirmation that the pullback has started, and you shorting until these levels is in line with the internal, meaning you are pro on the internal but against the swing, because you can see the swing is bullish. So you shorting are in line with the internal but against the swing. Once price gets to this zone, so all these shorts are phase A. So sorry, phase C. I don't know, I'm getting confused. So phase C, we're using that red. All these shorts are phase C. Okay, all these shorts are phase C, and phase C is one of the high probability phases, because you're in line with the internal and you have an objective you're trying to meet. Which objective? You're trying to play the swing pullback. And I said this one over here, these longs are still aligned with the so let's use a different color, a black. So black phase A. Okay, then the internals and the swing get aligned. So all these phase A, phase A, phase A. So you can see phase A's are usually high probability, right? And what you're trying to do is to take out this weak swing swing high. Okay, let's and obviously there's that guy who will be trying to buy from these zones. Okay, so remember the internal has already shifted bearish. Trying to buy before we have a bullish shift is against the internal, right? But in line with the swing. Against the internal, but in line with the swing. Okay, so that's where first B's come in. If there's a guy trying to buy here, so let's use is it visible? It's looking like red, looking like black. Anyway, yeah, first B trying to buy here. First B, someone trying to buy here is also first B. So you are trying to continue the bullish swing trend, but you're against the internal. Okay, yeah, somebody buying here immediately. These aggressive buys are also first B before we have the internal shifting. Then last, and actually I don't like first Ds, but in some cases they usually play out. So first Ds, remember you already have an order flow realignment. Okay, you already have an order flow realignment. Let me just label it. You already have an order flow realignment. So both swing and internal are aligned, but you'll still try to earn short from these levels, right? Yeah, so let's leave it that way. There's a guy who will try and short here because maybe we have a zone at this zone. Let's map the supply. Yeah, so here you're against both structures. So let's change the color to maybe blue. Blue is looking. Yeah, so blue is face B. I hope you guys are following. Blue is face B. You'll try and short over here. So you see this face D actually requires understanding. What are you trying to do? Let me say, in terms of really shifted bullish, you have another alignment. Obviously, you know, after a break of structure, is expect a pullback. So you can just catch that face D over there, okay, and try to play the internal pullback. But it's always very risky, okay? It's always very risky. So you can see all these things, and I've said phase A. All these phase A's are high probability phases, and phase C's are high probability phases. So phase C is to play the swing pullback. Phase A is to continue the swing trend. Phase B's are in line with the swing. You can see them, but against the internal. In some cases, they might play out and shift the internal bullish, but rarely do they. But I want you guys to be very, very flexible, okay? You can just buy here, try to play the pullback, but you can either play the pullback successfully and again price might shift from that zone. Because you know, once price has gone below the equilibrium level of the range, we're just ready to buy, right? But you have to wait for the internals to shift in line with the swing. Any question up to this zone? Okay, so if there's no question, let's try and look for an MTF bullish leg. Uh-huh. I think this is a perfect one. So you can see what was happening at this point. Uh, let's use this leg, a nice one. This is an MTF swing leg, bullish, pullback, continuation. Okay, you know this leg, you don't know where to react, what to do. So the first and foremost, map your swing. Your swing is this one. This being a swing boss. This over here is a strong swing low, and this over there is a weak swing high. And I said for you to confirm the swing high in a bullish market, the internals have to shift against. So let's map the internals from this break of structure. We had that. We had that. Then we had a shift on the opposite side. That was a confirmation that the internals. Okay. Then a pullback, a continuation. So we have our swing already. We're mapping the internals. Okay. A pullback, continuation. Nice. Pullback, continuation. So you can see how these things are easy to identify, man. Then at this point, I'll take this as a pullback, because if you take a tool from this high, this is an internal high, with this low, you can see price pulled back to around 25, sorry, to around 75% of the zone single. Sorry. So we have that as our internal break of structure. So let's all change them to black to avoid confusion. Today my voice is very weak. Yeah, I think not when I think, I'm just unwell. So that shift, let's leave it in red. So at this point, we had this high over there. So you can see price has already pulled back to the deep swing discounted levels. Because if you take your, let's take our pricing tool. I'm just using the normal gun box, but I've divided it into 50%, 0%, 25, and 75. So let's push it. So you can see already here we have the equilibrium, below we have the discount, and above we have the premium. I know that's not an issue right now. So price again, we have an order flow realignment of this zone. Okay, pull back, a continuation. Then pullback, continuation, break of structure to the upside, shift on the internals, confirming the start of the pullback. Then they shift, they continue, they continue, they continue, they continue. But now it doesn't continue bullish. We shift again bearish, but we don't want to look that leg. We just want to concentrate on this leg. Okay, Yeah, we just want to concentrate on that leg. So this low should come here. Then we have this as a new same low, because this is the low that broke. I hope you guys are understanding. You can see it's so complicated on charts. Yeah, so we shifted. Was that a shift? Yeah. So that is that. So I said above is premium. Uh, yeah, sellers. Then discount. Then equilibrium. Let's make it in block. Nice. So I told you guys, once price pulls to around equilibrium, we might be ready to continue the bullish swing trend. Okay, but you have to wait for the internals to shift in line with the swing. So let's map our zones. So let me see, maybe you had that. So I'll try to be somehow aggressive in these zones. Then I'll just be doing them randomly. Yeah, I'm just trying to take the entire range. Just let me zoom. That way. Then this one can map from, because these are a move caused by news, so I don't usually concentrate on them that much. Then we had this zone. So the reason why I mapped it that way, you can see we have a pivot inside here, and we have this zone. So just to save time, just map it as an entire zone. Breakout structure, price left, this supply. We have some other supply zones inside here. Nice. So all these zones we'll be studying them. Okay. Breakout structure, price left, this one. We have this immediate one. So I think this was again news. Breakout structure, price again left, this one. Nice. And we have the fractal. Okay. Then this demand, though it had not achieved anything, but remember, it's the demand created at the swing discounted level, so rather the last swing demand to hold price, if at all. So we have a bullish shift. Obviously, when you have a bullish shift now, we have demand zones left. So let me map the entire range. Then now we can map maybe the pivot covering that sell to buy. Yes, then now we have this one. So you can see what happened here is that price left this first demand, right, which was mitigated by this candle, left this sell to buy, again mitigated by this sell to buy. So we have this sell to buy over there, fresh. Nice. Then we had a breakout structure again, price left us with this demand. Nice. Then over here, let's see, this big one had been mitigated. So we had this buy to sell to buys. This last one over there was fresh. Nice. Then price pulled back to around this level. You know, some zones are usually very confusing. So if you find a zone is confusing, you can go to M30, okay? Then push up, price left this range demand. Price left this one. Yeah, several sell to buys. This one, you know, you have to mark them all, okay? And lastly, that one. Then we broke, we shifted bearish. Yeah, so I said we're not looking at pull back again. Let's just study this leg. Nice. So okay, there is a perfect. So don't get confused. We have these as our swing leg. Okay, pull back and a continuation. Then all this inside here is the internal. All you guys are seeing, it's not complicated mapping. You know, some of you are usually mapping these internals, but yeah, then let's get back here. So at this level, press left this demand zone. We had this demand zone. Yeah, so if you see a zone is here this way, you can go to M30 or H1. You'll find a very good zone inside there. So you just don't want to go to those time frames because I don't want you guys to get confused. Yeah, so we have that. Then you can see over here we have nothing, just liquidity, right? So there's basically this is the last demand zone, anticipated to hold the price if at all the swing order flow is to remain bullish, right? Nice. So I told you guys, once we have a break of structure, you can always try looking for quick longs before the internal confirms the start of the pullback. And the internal is confirming the start of the pullback by this shift, okay, or by that trend change. So there's a guy obviously who bought at this level. Nice. Because again, you have to remain flexible. Before we have this shift, you can just buy. Or else you'll find yourself waiting for that shift forever. Yeah, so we have that. Let's obviously you see all these demand zones. All these demand zones never achieved anything. Okay, they never broke any structure. Obviously, the guys will try buying. Let's just mark them. Nice. We have this one. So I actually just like mapping those ranges to avoid missing out. Okay, nice, like that. Very simple. So if you check on this presentation, is the same thing that I've drawn here, right? It's the same thing that I've drawn here. No difference. The only difference is that now I was drawing online, but now we are on live charts. Okay, so I've said shorting from this level. Now I won't be checking on the colors. Okay, or maybe I can write them. So all shorts after the bearish internal shift are phase Cs. Okay, because we are in line with the internal to play the swing pullback, but we are against the bullish swing trend. Okay, so all the shorts are phase Cs. Anyone trying to play the shorts are phase Cs. Nice. Anyone trying to play these longs before the shift are phase A. These ones, because I are in line with both swing and internal. So that's a phase A. So you can see phase A's before you confirm the pullback. It can again fuck you up, but you can see it was in line with both internal and swing. Okay. Okay. At this point, we've already shifted. Anyone trying to buy at these low zones, we're in line with the swing, but against the internal. So these are phase B's. Let's give them that. Phase B, phase B. Yeah. Here we are still phase B. Okay. Nice. Anyone trying to long after this order flow realignment? After the order flow realignment, all those are phase A's. Okay. Because now both swing and internal are aligned. And I said after breakout structure, looking for phase A again is a very, very tricky. Phase D's, we have both swing and internal aligned, but there's that one guy will try longing from this previous supply zones. So we'll try shorting. So any guy will will be shorting from these levels will be trying to play phase D. And I tell you guys, playing this phase D is not bad, but you have to know what you're doing. Okay, maybe that, and maybe before we have that. So you can see this guy is trying to play the internal pullback. This guy is just trying to play the internal pullback. But now the problem is one, you don't know where the pullback will get to. So when playing this phase D's, you have to be very, very quick with your targets. Okay, be quick with your targets. Don't over target. When playing phase A's, you can target the weak swing high. Let me say you got a trade here, you can target the weak swing high. You got a trade here, you can target the weak swing high. You got a trade here, you can target the weak swing high. If you got a trade at phase C level at the start, you can hold that trade and maybe start hesitating once price gets to the equilibrium. Okay. Yeah. So let me say you got a trade here, you can target this first zone because it's just below the equilibrium. Okay. Now, what have I done? Okay. Is it complicated? You guys tell me, is it complicated? It's not. It's not, right? It's not. So at this point, you can see the fractals first shifting in line with the swing. So this is the first confirmation that you might be ready to, yeah. Yeah, so we have that. We have that. Any question? I've said phase C and phase A have high probability, depending on pricing. Phase C from the premium levels are high probability to deliver price lower. Then phase A's from the discounted levels are high probability to target the weak swing high. Okay, this phase A's are low probability. You can just play them quick, but don't overstay your visit. Okay, yeah. So, any question? Very easy. Yeah, very easy. Okay. So make sure when you're on charts, have an objective and know the general narrative of price. Okay, have an objective and know the general narrative of price. You can't just come on charts and try uh, longing from this one, meaning you have no objective, right? So have an objective you're trying to meet, because I've told you guys phase C's are very, very high probability to play the swing pullback, and phase A's are high probability to target the weak swing high. And I've told you guys again to consider pricing. Okay, you can't come and buy over here. You can't come and sell at this zone. Sure, you're already at the last demand zone to hold. Yeah, so it's that simple, and that's how market phases are. So today I'll give you a very, very basic assignment. I want you to go do your mappings from the daily time frame to the higher time frame to the middle time frame. But now this time, map all relevant supply and demand zones that reacted to price and achieved the anticipated objective, and have your narrative and objective. What do I mean? Let me say you're doing this mapping, You have this leg, right? Let me say price was just here, and maybe we had already shifted. So you say the swing order flow is bullish, okay? Internal just shifted bearish to facilitate the swing pullback. Nice. So let me say price was here. What will you write for me? You'll be concentrating on the shorts to play the swing pullback. That will be your objective for the day. Once you have an order flow alignment, what do you say? Both swing and internal are now aligned. We expect, or rather, I'm anticipating for the weak swing high to be taken out or to be violated, because I said weak swings are to be violated. What is your objective for the day? You already have your narrative. Your objective is to play the swing protein continuation. So the only thing you do on charts, let me say you open your charts. Let me say now you open your charts. Price already have this order flow alignment, okay? You open your charts this way. The only thing you do, you map your internal. You have your internal leg. After mapping your range, you map your zones. Then you wait for price to come into those zones and look for your entry model. But I said if it's phase A, you can go aggressive once price is from the discounted levels in a bullish market. So you can come, set your positions there, a size rate above, and maybe target this high. Okay, that's for phase A's. You can just go aggressive. But for the better part of the system, for the better part that I've traded this system, I usually wait for confirmations on all phases, because you don't know when the price will come and react to this one and go, or price will come to these discounted levels and go, right? So it's better to just look for confirmations. You just look for confirmations. Yeah. So again, as you can see on this leg, we had no demand zone. You can just come, enter here aggressively. And what did I say? You target for phase A. For phase A, you target the weak, swing high. Man, it's simple, right? You can see again on this leg, though this leg wasn't that clear, but you can see. Yeah. So once we have a break of structure, going long is now very tricky. Though that's still phase A because the internal is still in line with the swing, but we still don't have this shift. But what I usually say, once you see a break of structure, always expect a pullback. Okay? Always expect a pullback. Any question? Any question? So once you have this internal shifting bearish against the swing, again you can play phase C's, continuation phase C's, all these are phase C's, phase C's. Then, like I said, you have to wait for the internals again to give you an order flow realignment. Okay? So as you can see from this one, we had this as the internal leg. Yeah, so this high was obviously not going to be taken out to have another flow realignment. So we had a shift. The internal continued being bearish, bearish. So after a break of structure, what do we expect? A pullback. But you can just play this until we have the pullback confirmation. It's not that much complicated, right? Yeah, so we have that, and technically, we might have this. Okay, yeah. So what you should be doing on MTF? Have your narrative. What is swing bullish or bearish? Is internal bullish or bearish? That is the narrative. Have your objective that you're trying to meet. What do I mean? Why are you shorting? Why are you shorting? I'm shorting to play the swing pullback. I'm shorting to play. Yeah, I'm longing to continue the swing pro trend. And again, ask yourself, what are others seeing? Yeah, for what are others seeing, we'll talk about it tomorrow on liquidity, so that you don't be liquidity. Okay? Yeah. So any question? Any question? Any question? Any question? So when you're doing your mappings at the moment, when you're doing your mappings, make sure you write what is your narrative, what is your objective. If I ask you that, okay, Maggie, why are you longing? Why are you shorting? You should be having your answers at the fingertips. You can't just come and long or short because price is at a zone, right? Yeah. So if you remember yesterday, we talked about sweeps as a criteria used to map point of interest. So you can see this point of interest over here, give us this sweep. So meaning we have enough liquidity to go lower. So at these levels, you can always just take your trade aggressively, or you can just wait for normal confirmation. If you're trading the MTF, you can just wait for normal confirmation, having that as a liquidation, PBL failure, then you're entry at that point. It's so simple. Whatever happens on LTF will happen on MTF, will happen on HTF. Price is very, very fractal, okay? Yeah, so far so good, we've done good. Most of the main concepts on this system have been passed to you. Yeah, if not all. So tomorrow, we are on liquidity and entries. Yeah, liquidity and entries. So that is one of the main, or rather the sensitive topics on this system. Try and attend when I'm hosting, because I know watching these videos later is tiresome. That's why I can't even rewatch if I was a student. Yeah, so try and attend. Then you simplify on your side. Market faces is very simple, and that is one of the basic, one of the most sensitive concepts on MTF. I've said it's only on MTF. Market faces don't bring it on HTF, and you can see we've done it very, very perfectly. That what we've got over here is what I drew to you guys over here, right? Yeah, so don't complicate stuff. Always have your objective and your narrative. Once you have a narrative, you always try and play these objectives very, very well. Yeah, so tomorrow you can see the internals. Let's see this leg. There was a previous internal leg. Okay, we had that shift. Was this really okay? Price pull back. No, I've done wrong markings at this one. So we had this leg. and this is our internal, right? We have a breakout structure. After breakout structure, for you to confirm the pullback, check now on the fractals, because now we are on the internal. So the last bearish fractal breakout structure was that one. This was the high that broke the structure. So up to there, we still don't have that. We don't have that. We don't have. So let's map this as a liquidity. So this is the high of today, right? Yeah. So this one is very high probability. This one is mapped on H1. Yeah. So this is let's map just as liquidation. Yeah, we know it's the previous day high. Today's low was this one. What zone do we have over there? We don't have any zone. Yeah. So our range is from this high to that low, and the pullback is just enough, right? The pullback I just played perfectly, and we might be ready to continue that way. But following the fractals, you can see the fractals are bullish, right? Yeah, because you have this bullish fractal breakout structure to the upside. Sorry, a pullback, we had that. So this is the bullish breakout structure to the upside. So meaning we have this leg as a fractal. We can also have that. Then maybe a lever price there. Yeah, so you just remain flexible and have your objective. So let me say like tomorrow, or next market open, you are longing from this zone. If I ask you, why are you longing? You are longing to play the fractal pro trend, okay? If you're shorting from this zone, you're continuing the bearish internal trend. If you're shorting from this zone, yeah, just that simple. So the only difference is that nowadays, I just come and use this leg over here as a swing leg. Yeah, because I've always seen these two pairs, GBP USD and Euro USD. It's very hard for them to play these price actions within an intraday trading hours. So I just use this leg as a swing. Then this fractal, I'll use this as the internal. Yeah, it has always worked. But you have to know what you're doing, okay? You have to know what you're doing. Any question? So tomorrow, I want to see markups. I don't know if I'll be on charts because I'm unwell. When you're doing your markups, have your narrative and objective. When I ask you why are you shorting, have your reasons. Why are you longing, have your reasons. Okay? Yeah, just don't long or short blindly because price is getting from an MTF zone. And like I said, we're trading from the MTF. Where's that? We trade medium time frame order flow from medium time frame point of interest and use LTF executions once price gets there. So if someone maybe asks you, what are you trading? Yes, you can tell him this in few words. Don't be that person that starts fumbling. You don't know what you're trading. You're just there. Okay? Yeah, so you know what you're trading. It's just pure order flow. Yeah, just naked charts. Yeah, we don't use any indicators. Just naked charts, zones, liquidity levels, timing. We know what you're doing. Okay? Yeah, so like this zone over here, we know very well that this zone is today's high, meaning tomorrow it will be the previous day's high, right? So this previous day's highs and previous day's lows are liquidity levels, that the medium inducements. Like now these ones are major. Okay, we have New York high, New York low, London high, London low. Those are major medium inducements. We'll talk about them tomorrow, but for now, let me just give you a hint. So what we are expecting, you can see all this is liquidity, right? There's no any valid supply zone. If this zone holds, okay, you can target this liquidity, take out previous day's high, then short. Is it complicated, my friends? It's not. Yeah, that's the reason why you can only see I'm very accurate on my expectation order flow. Yeah, because price will do what it did last year, this year. Yeah, price will always be attracted by liquidity and driven by liquidity. Yeah, so like this one we have a trend liquidity over here, buy side trend liquidity. It can attract price once price gets to this zone. You can see these are leg inducement to this leg, right? Currently price reacting from it. We expect no we don't expect these leg inducements to achieve an objective. What do I mean? Let me just mark it so you can see. These are leg inducement. Leg inducement. We're not expecting this leg inducement to achieve an objective. So you can see this reaction never took up this high. So that is perfect, okay? Yeah, but we don't know what will happen overnight. But that will be a very good move to target this high, then short from that zone to continue the general bearish trend on the internals. Simple. Yeah, it's very simple, very simple. So should we call it a session? Because I'm not seeing any questions. Yeah, I'm not seeing any questions. I'll assume that most of you have understood. So